Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, a reader asks, how many properties are usually listed for sale in Canada, and how many are listed right now?
Okay, so there's an interesting question, and it's one that if you called organized real estate, they would probably have a standard answer for you. What I would say to your listener is this: the very first thing is that the number of properties for sale is not relevant to anything. Now, what I mean by that is that to their specific buying needs, or the value of their own property the number of properties listed nationally in Canada doesn't matter. And these 10-year averages numbers that you hear a lot of people quoting, the Canadian Real Estate Association will quote it in the middle of March here when they're reporting February numbers. Those sort of numbers don't matter either. And the reason why is because the size of the housing stock, the number of houses in your community, the number of houses in Canada is constantly increasing. So a 10-year average is a number that doesn't make any sense to look at, because of course the number of houses in Canada 10 years ago versus today is substantially different. So that would be my caveat to the following answer. How many properties are you listed for sale in Canada? So really what you should be saying is what percentage of the owner-occupied housing stock is normally listed for sale. And that would be a number that people could work from. We don't look at those numbers because we look at it all regionally and municipally, and we take it right down to the community level depending on what the people are looking to do. I know as of today that we're sitting at, actually I can give you an exact number as of today, Jim. Let me just pop that on here. We're looking at about 180,000 homes are for sale in Canada. Now, if you were to ask me, Ross, is that a lot of homes for sale in Canada? I would say no. We do not have enough inventory on the market right now. Now, we view inventory counts differently than everyone else. So if you were to talk to a real estate agent, if you were to talk to a real estate board, if you're to talk to a bank economist or an academic, they would look at listing counts differently than we do. We look at listing counts as a confidence metric. In other words, how confident are existing homeowners in the housing market that they are willing to trade up to a more expensive home? Because generally speaking in Canada, the vast majority of sellers, their plans are to buy a more expensive home, a higher quality home. That is just how the property ladder works. When you only see 180,000 homes for sale across Canada, we don't see this as a lack of supply. We see it as a lack of demand going forward. And we're right, and everyone else is wrong. And years later, they find out that we were right. So when I only see 180,000 homeowners with their homes listed for sale, I know that sales will be declining going forward. Where if you listen to everyone else in Canada, they're going to say, oh, well, that means there's not enough supply. Prices are going to go up because there's more demand than supply. Well, This is why you don't look at new listings to sales ratios. You don't look at months of inventory ratios or stats released by real estate boards, because those numbers are always correlated to what people are going to do in the future, not in the past. So when you're asking me the question, how many properties are listed for sale in Canada, the answer is simple. There's about 180,000 available today. And how many should I expect to be listed on the market? So in other words, if I thought that people were confident in the housing market in Canada, people were confident they could move to another home and upgrade their property, we would be looking for somewhere around probably around 320,000 right now as we're walking into March. That would be the quick and simple answer. I just want your listeners to understand, behind that quick and simple answer, there are a whole bunch of complicated questions we have to ask to arrive at that answer.
And what are some of the factors you look at?
Well, when we're looking at the listing counts, because again, we look at that as a future demand item. So today's listings are tomorrow's demand. If your listeners go out and Google that, or they go to any of the economic, post-secondary economic courses that are taught in Canada about housing, you won't see that comment made. But I think your listeners would understand it's only logical that people have to sell their own house before they buy another one. Now, there are little tiny periods over a 20 or 30 year period where people are confident enough to purchase their second home before their current home is sold. We saw that in around March, April of 2016 in Vancouver, and we saw that in February, March, in April in the Greater Toronto area in 2017. We have another metric that we use to measure the market to understand if that's really happening or not. And that metric that allows us to understand what the inventory levels are like.
Ross, another question from a listener. When does the spring market start and end, and what do the numbers really mean?
Okay, the spring market myth, the spring market, the seasonality myth of real estate. What your listeners need to understand is a housing market works in the following manner. There is the realty cycle. Now, a realty cycle is measured from peak price to peak price. And in between, you're going to have a trough of prices where prices drop off. Real prices of a house drop drastically. Peak to peak is called a realty cycle. And that generally lasts for a very long period of time, often decades. The current realty cycle that we're in right now is at its 27th year. Within a realty cycle are called trading cycles, and the trading cycle really is the all-powerful economic impact on an economy during a short period of time. Now, a trading cycle normally lasts around 18 months to 30 months. That's how long a trading cycle normally lasts. But what we have experienced in Canada is the longest trading cycle in history concluded last fall. That trading cycle it lasted from 2013 right on through till 2017. We've never ever had that happen before. Now, the trading cycle matters because that impacts price change during that period of time, over the course of the trading cycle. The longer the trading cycle is, the more house price appreciation will be recorded, which we call house price illusion, house price inflation. Your trading cycle is divided into trading periods. Now, the trading period is very important to people that are purchasing or selling a home. because within the trading period, there are stages. And those stages dictate when you should be buying a home, depending on the category of home you want to buy. It also tells you when you should be selling your home, depending on the category of home you want to sell. Now, these trading stages have been misconstrued over the years towards seasonality, and that's really where the problem happens when people want to discuss when does the spring market begin. We can't define it saying it's a spring market, because spring seems to indicate that is when, you're planting flowers, the flowers are going to spring forth, and it's an exciting time, and generally speaking, people are thinking that's when the housing market is going to be at its busiest. We look at the spring market as actually the first trading stage in a trading period. That first trading stage happens at different times in different provinces, and depending on where you are in the trading cycle, it can change there as well. There is normally, Jim, anywhere a trading stage will last between 2 and 4 months. Okay, they don't go shorter, they don't go longer. Those trading stages, because they're 2 to 4 months, they're not consistently 3 months all the time, which would give you your spring market. It moves. The first trading stage, for the sake of the argument, in Ontario, happened way back in August of 2017. So our current trading period's first trading stage happened in August of 2017. At that moment in time, the house prices of the homes that sold in the month of August dropped their most in the calendar year. So we would call that traditionally, if you're looking at for seasonal adjustments, that would be your spring market. But we don't view it that way. We view it that as the first trading stage, and that happened way back in August. So that was in Ontario. If I flip to British Columbia, when we're looking at trading stages, again, in this particular calendar year, that happened in August. For 2017, it happened in August. So we would have said it was really spring. Spring would have been August 2017. Now that really doesn't make any sense, Ross. That's the end of the summer. But in terms of how people classically think of a spring market, that's exactly when it happened. The year previous to that in British Columbia, it was in September. So it wasn't August, it was September. And, Ross, it's only a month different. Yes, but that shift of 1 month causes a shift in all the other stages of the trading cycle that are going to take place. So a simple answer is, when is the spring market going to take place? How realtors measure a spring market, Jim, is again totally different. Generally speaking, realtors call the normal spring of the year, the spring market. And the reason for that is, as the new year begins, realtors get over the holidays and they start to take all their courses and training about prospecting. They have their calendar year business set up where they go out and they canvass for new business early in the new year. That naturally causes more listings to come onto the market in the spring of the calendar year. It has nothing to do with buyers and sellers. It's got to do with realtors doing their job, making their income. That's why at the end of the year, when most of the realtors are tired out and getting ready to take holidays, you don't see listing inventories grow. It's got nothing to do with seasonality. just because the business models of the realtors want to follow a calendar year, home buyers don't. And that's where the confusing part of the seasonality and the spring market comes into play. What I can tell your listeners is this. In British Columbia, because I know we've got a lot of listeners in British Columbia, in January of 2018, the average selling price in that month was only $7,500 more than it was the previous month. It was only $7,500 more. That little tiny increase means that house price growth in the following stages is going to be held back. Because if you look at January of 2016, for the sake of the argument, and this one's going to blow your socks off, Jim, because we're talking, I know you live in British Columbia. In January of 2016, in that calendar month, the houses that sold were $114,000 more than what was selling in December. Now, your listeners never heard these numbers released anywhere because other people don't read the market the same way that we do. Your listeners didn't hear that it was a $140,000 drop in August 2016. We monitor these stages because it's going to dictate what happens in a following stage. And it dictates when you should be buying or selling your home in a given calendar year, or as we don't look at the calendar year, we look at the trading period. All of these things come into play. So the simple answer to the spring market is you're going to see more houses listed for sale in the spring of the calendar year, like the real true spring, whatever everybody thinks is as spring, because of realtors, the way realtors interact with the market. Now, looking at that comment versus the previous question you asked me about how many houses were listed for sale, because there are only 180,000 houses listed for sale on March the 3rd, which is when we take our readings, that means that there are not enough buyers going to be available to have the same number of sales in 2018 as there were in 2017. So regardless of what anybody tells you, tomorrow's real estate numbers are decided by events that take place today or took place in the past. Tomorrow's real estate numbers cannot magically inflate. If they're going to inflate, in other words, if sales are going to go higher or prices are going to go higher, those decisions were already made months behind, like months and months ago. You're only going to see the consequences of those changes months later than today. That's because of trading stages. And unless you're monitoring all of these items, you don't know when you should be entering and exiting a market or when you should be buying a home. Certainly, as a first-time buyer, it makes the most sense for a first-time buyer to purchase their home while housing prices are falling in a trading period. To the ordinary person, that's what would make logical sense. Our answer is just the opposite. The time for a first-time buyer to buy in a trading period is when housing prices are gaining at their highest amounts. And I know that doesn't make any sense, but so I'll explain it to you this way. When the housing prices are going up at their greatest rate, it means that there is the least amount of pressure on properties listed at the lowest prices. The only way you can see 130,000 record monthly gain in house prices is because first-time buyers didn't buy that month. That's the only way it happens. So, as a first-time buyer, it really makes more sense to be buying your home when the fewest first-time buyers are in the market. Conversely, it's just the opposite. For if you're a trade-up buyer, you want to be purchasing your home when there's the least number of trade-up buyers competing against you for the houses that are for sale. And when that happens is when housing prices are dropping. So you want to be buying your trade-up home at the peak time that the monthly sales prices are dropping. That is just the opposite of what every home buyer has been told in Canada for the last 40 years. But what I'm telling you, I think it makes sense the way I'm explaining it, I hope, because I know from a factual data point what I'm saying is true. If you asked me, Ross, what would have been the best time for me to buy a trade-up home in British Columbia in 2016, I would have told you it was August. If you would have said, Ross, what is the best time for me to buy a starter home in British Columbia in 2016, I would have told you would have been February. Because I know that category of home in those given months was under its lowest supply and demand impact. There were fewer buyers for those category of homes in those months. So obviously that's when I want to be buying, because that's where I get my huge increase in quality. I'm buying a way, way, way better home if I'm purchasing it at a time when I'm not competing against more buyers. I hope that makes sense.
We'll have more with Ross Kay right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, last week the banks were on record for having recorded the best profits in years, and those numbers came out at the same time the last GDP results were out. We know usually you stay away from economic theories, but what is the whole deal now with rising interest rates, household spending, and debt? What's your take?
What's our take on last week's? Yeah, so what our take is the same as it's always been, Jim. The trading cycle is all powerful. The realty cycle, when it comes to recessions, is all powerful. But in terms of year-to-year economies, the trading cycle is all powerful. And in Canada, the correlation or the causation of the trading cycle on GDP it isn't challenged. This is simply the way things go. Last week, the banks reported record profits. They said that because their first quarter carries over into January. When they report that first quarter, they were making comments about the B20 lending rules not really impacting their mortgage books. And the banks are all trying to convince everybody that their profits are going to continue to increase, and you should own bank stock, and the reason you want to buy bank stock is because it's going to increase in value. That is the reason that these talking heads are out in the press talking about their bank profits. At the same time, we had GDP numbers out where we heard that the GDP numbers were once again extremely strong. How we look at it, Jim, is very simple. We know the trading cycle peaked in the fall, on a national level, in the fall of 2017. That means the most amount of mortgages to be booked in this entire trading cycle, which started back in 2013, will have taken place, will be recorded in the first, what the banks call their first quarter, which ended January the 1st, January the 30th. That's exactly what the banks reported. This to us is logical. This to us is to be expected. In the same way that quarter 2 and quarter 3, the banks will start to be recording lower mortgages being booked. And they're going to be blaming it on the B20 rule, because they can't blame it on their own incompetence. They can't blame it on the fact that their economists don't understand how the trading cycle impacts every aspect of Canadian life. Where the bigger problem is, Jim, is GDP. And household consumption in Canada dominates gross domestic product. It dominates it. And that's probably true in the States as well. But what your listeners don't know, which bank economists don't know, which obviously the government doesn't know because this wasn't included in their budget, is that there is this strange little fact called the wealth effect. That back in the 1960s, economists came up to the conclusion that the stock market, the amount of money people were making in the stock market, created a wealth effect that allowed them to go out and spend money. There was never enough data to correlate that assumption from those economists. Years later, Case Shiller tried to do a study about it, and then he failed with his study because he tried to associate it with house price changes. But of course, Case Shiller, both of those guys being economists, they misunderstand how house prices work and how the housing market works, so they were wrong in that case study. Then after the Great American Recession took place, Case Shiller did another study, revisiting their earlier study of 2005 and 2008. This one was done in 2013. And all of a sudden, they started to suspect the wealth effect did impact gross domestic product. What I can tell your listeners is this: the wealth effect in Canada and household consumption as part of GDP is 100% correlated. The causation for GDP growth on the household expenditures is rising house prices. There is no room to move. The only difference in GDP and house prices is that the wealth effect is impacted by how house prices change and the amount of mortgage debt that is paid down. Now, you have to understand, the longer that a person lives in their house, the more mortgage debt that they're paying down. At the same time, maybe their house price is going up. So their net wealth effect is increasing. That causes homeowners to go out and spend more money. Now, when you look at data points that are comparable, in other words, don't listen to the CREA benchmark prices, the MLS HPIs. Don't listen to any of those. Don't listen to the seasonal adjusted GDP numbers. Don't listen to any of those. If you look at the numbers that actually matter on terms of price and GDP, there is a 330% increase in GDP peak to peak of the last trading realty cycle we just finished. At the same time, house prices increased 330%. There is no possible way over 27 years a 330% exact same change in GDP and house prices could happen. We also track it during those 27 years, and if you understand how mortgage debt is paid down as housing prices change, you can also see its impact on the GDP. So, we're right on the mortgage debt, because your listeners can go back to the old shows and check it. We are not idiot savants. This is not some holy grail of knowing what's going to happen to the economy. This is just simply how a housing market functions. We know how it functions, as we say in your show here. GDP is impacted by the wealth effect of home equity. Home equity. No economist in the world has ever studied the wealth effect of home equity across household consumption and GDP. Okay, we don't study it. We don't have to study it. We know there's a 330% change over that 27-year period of both house prices and household consumption in GDP. 330%. We know that the bank's mortgage books are going to not increase year over year in the next 2 quarters, Q2, Q3, Q4. Where the problem is this, Jim, is that because I am not an economist, my team are housing analysts. We are experts in home equity. We're experts in home ownership. What I have not studied long enough, and which I don't have enough data for, is what happens when we come off of this peak. What happens when GDP doesn't grow, and what happens if GDP for households consumption drops? I believe that's called a recession. What are the compounding effects that take place? I will leave to economists to understand, because they know that. I know the housing market. There is no confusion here, folks. The GDP results that were peaking in the last quarter of 2017 are solely reliant on the trading cycle in Canada. Okay? Our GDP is dominated by household consumption. Household consumption is ruled by the trading cycle, home equity. I don't know what it's going to be look like going forward, Jim.
We'll have more with Ross Kay right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, today the Toronto Real Estate Board failed to issue their February housing release. Yet in 2012, when the 5th of March last fell on Monday, they released on that day. Last week, the Edmonton Real Estate Board failed to release their numbers on the traditional day they do it. What is the reasoning behind all these oddities?
The reason behind all these oddities, I believe, now this is maybe an arrogant statement, Jim, but you know that I am an outright contrarian about the stats released by these real estate boards. They are under an increasing amount of scrutiny over the data that they've been releasing, the stats that they've been releasing, disguised, trying to pretend that it's data. I believe the Toronto Real Estate Board, because they issued a faulty release in January, which the February numbers are not going to support. In other words, what they're going to be releasing tomorrow will be drastically different than what they thought they were going to be releasing. They're in cover-up mode right now. The same thing is happening in Edmonton. The people, if you look in Alberta, you would look at Calgary and Edmonton's real estate stats, and we would look at their data, and we would analyze it and know where the market is going. We knew that Calgary was going to report negative sales in February when everybody else thought they were going to report positive sales. We're the only place in Canada where we knew for a fact they would have negative sales. Edmonton has had its very first time in the last 5 years where you're going to be able to compare February's numbers of this year against February's numbers of last year. The very first time in 5 years. Because that MLS system, the reporting rules and regulations, have changed between Calgary and Edmonton and Alberta so much over the last 0 to 3 years prior that this will be the first opportunity where you're looking at data or stats from a previous year where they're actually comparable. In other words, you couldn't compare 2013 and 2014, couldn't compare 2014 and 2015, certainly couldn't compare 2013, 2015, and you couldn't compare 2017 against 2016. 2018 against 2018 in Edmonton will be the very first time, the month of February, where you can compare their two stats. I think everybody's going to get a wake-up call in Edmonton. We can discuss that next week. In Toronto, you had last year at this time, the Toronto Real Estate Board was out there asking Torontonians and the clients, the home buyers, to believe what the real estate board was telling them, that this market was going to go on forever, that housing prices don't drop, that Toronto was a world-class city, that supply and demand factor was impacting everything. And we know now, a year later, that, whoa, it looks like maybe the Toronto Real Estate Board lied to us. We are looking at, for January, for the province of Ontario, the way that we measure the market, we are looking at about a 24% decline in their market, Jim. 24% decline. The people are going to hear some negative reports from the Toronto Real Estate Board based on the Toronto Real Estate Board for the last 50 years never telling people the truth about the housing market. And now they've been caught. They are now going to be faced with this in the months coming forward. I believe, Jim, the reason why these boards haven't released is because my firm, as we did with the Real Estate Council of British Columbia, self-regulation has ended. As the Canadian Real Estate Association pulled back the metrics that they released to the public and changed their wording after we were in the press criticizing them. I believe the real estate boards are fully aware that Ross K. Realty Consultants may be the only people in Canada who understands how real estate stats were created and how they're released. They have been caught. The result is they need more time than they normally did to shape their press release. Pick out talking points. Find ways of shifting blame away from themselves to everyone else. Just like the banks are going to say their mortgage books didn't grow because of B20, instead of their economists knew their mortgage books were going to shrink because the trading cycle had ended. You're going to see real estate boards come up with answers, B20, government intervention, foreign buyer tax, rules changes. They're going to have a whole plethora of excuses. When I will say it's this simple. The housing market has evolved over the last year and a half exactly how we said it was going to evolve. A housing market it doesn't matter what governments do. It doesn't matter what taxes they apply. It doesn't matter what B20 rules come in. Those rules will impact the next trading period. They will impact the next trading cycle. They will impact the next realty cycle. They didn't impact the one that we're in now. What you're getting today in real estate boards across Canada was written a year ago. The path is unchanged. The path is the same. What you have right now are real estate boards trying to figure out their messaging strategy to the public. Because today's consumer, Jim, is smart. Today's consumer has Google. Last time this happened, there was no record of this happening. It appeared in the newspapers, and the newspapers disappeared. Unless you could go to the local newspaper archives and get the microfiche reader out, and you could go through paper after paper after paper after paper after year after year after day, trying to find out what the real estate was saying, you have no way of knowing. This time, a couple words typed into Google, and you get your answer. These real estate boards right now are crafting a message to be released in Edmonton and Toronto based on what happened in Calgary already and what has been reported in the Oakville, Burlington, and the Toronto, the Hamilton, Burlington real estate boards in Ontario. And that's what's going on right now. More deception, more misleading, more fraudulent actions, in my opinion. If you're ignorant to something and you claim to know what you're talking about, to me, that's a fraud. So when I'm saying a fraudulent action, that's exactly what I mean. These real estate boards are ignorant to a housing market. They have no idea what they're talking about. It's a fraud what they've done to the public since 2013. And I think that's what's going on right now, Jim.
Ross, thank you very much for the update.
Hey, thank you, sir.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or anybody else on our show, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.